We need to find a steady income stream, right? To kind of leech money off the volatility of Bitcoin and off MSTR. So while Misty is a different product, right? We should understand what differences actually make it a better product, and what about it actually might give us less returns compared to the underlying or the underlying's underlying. So basically, I just want to make a quick video about Misty itself, and explain what's going on, because there's a lot of you guys out here who kind of are being persuaded by other folks who have a lot of money. Those guys will never need to understand Misty, right, guys? If you think about it, it's kind of like Bitcoin, right? Bitcoin and MSTR and Misty, they're just different layers on top of each other. So the less someone needs to understand, the less they'll be willing to look into it. But for those of us who are not millionaires and who don't make 50 racks a month, right? If we just own Bitcoin and we just own MicroStrategy, then how would we increase the quality of our life, right? That's not really doable there, because you're not going to know when to sell MSTR or Bitcoin. And when you do sell it, it's going to hurt you to do it, because you know in the future it's going to be worth more. So, and plus, don't even get me started on the tax situation, right, guys? There's a bunch of bullshit going on. So the question is, how do you use Bitcoin and MicroStrategy to improve the quality of your life without being a dumbass and accruing tax gains, and quite frankly, selling at the wrong price? Like let's say you need some money to pay some bills, right? Right now, MSTR is down 55% from its all-time highs, right? Or whatever that shit is. You're not going to want to sell here. It's going to hurt. But Misty paid me out this Friday, right? This past Friday. I mean, I got a few racks from that. So if I need to spend money, I can spend money. If I don't, I can reinvest. If not, I can just keep the money, right? Like, it's supposed to be meant to seen as an automatic profit taker of some sorts, right? And during downturns and during flat times, Misty actually helps us lower our cost basis and increase the number of shares we have. So therefore, the next run, we get more dividend because we have more shares and a higher dollar per dividend, right? So mainly, today we'll explore Misty's structure, performance, and we'll go into the prospectus itself. And maybe towards the end, what we could do is just go over some potential returns using some Excel models, right, guys? So, yep, this is the YieldMax website, right? Misty, we know it's a MicroStrategy options income strategy ETF, right? In the past, we see that their yield looks like shit and their distribution rate looks like this. So what do these terms actually mean, right? Well, the 30-day yield here, it's actually referring to the percentage that your money would have increased in the last 30 days, right? So the price has roughly stayed flat, but the distribution rate, it's referring to over the past payments of 13 payments or annualized payments. This would be the rate of distribution. So to look at the fund specifically, it says that investing in the fund involves a high degree of risk, right? Risk, the way you can calculate your risk is simply calculate your level of understanding, right? The more you understand, the less risk there is. So if you feel like it's a risky investment, I guarantee it's because you do not specifically understand how the fund works. You cannot just simply put your money in a random ticker and expect you to double your money every year, right? You might want to understand what's going on here, because Misty, the product is not strategy, the product is not Bitcoin, the product is not anything regarding that. The product is actually the volatility. And I think I saw someone on X say that if a bag of rocks were volatile, there'd be a fund based on that too, and that's kind of right, you know. There'd be a rocky fund if there were fucking volatile shits as rocks, right? That's not the case here. We're using MicroStrategy and Bitcoin, but their volatility is what we're generating, or we're arbitraging itself, right? But that's what we're like making the money on. So as you can see, their past distributions, it kind of looks like they're going up and down and up and down. But if you actually look into the declaration date and the payable date, like if you just look at what happened from April, right? So for this April payment date, you should think 30 days passed, right? From March 10th to April 10th, what went on, right? For this payment, right? From February to March, what went on? Likewise, for this one, you'd want to see what happened from May 5th to June 5th, right? When you look at the price action of MicroStrategy during those moments of time, the price of the dividend that they've paid out will make more sense. You'll actually somewhat notice that the payments that they give you are somewhat of a 6.5 to 8.5% yield on the current average cost during that segment. So for example, right here, throughout this part, right, we know what happened, right? MSTR was absolutely booming, right? So when Msty was around $40, $45, right, you shouldn't be too surprised to see about a $4.40 payment, right? But nowadays, when Msty is $20, $22, right, we see that they're still paying about 6-7% of our money, right? If you invested all of your shares at 45, well then yeah, you're not really getting more than 3-4% of your money. Well, but that's a you problem, right? That's not based on the fund. And their prospectus is, it states that, and you should not expect what magic money, right? It's all math. It should all be derived. Your logical, like, kind of like requests of money that you have in your mind, they should make sense, right? I mean, I'm not gonna think that they're gonna pay out $7 dividends next Monday, right? It's not gonna happen. Well, but if the share cost is around $75, and MSTR is way above 1,000 or whatnot at that point, well, then yeah, it makes sense, right? Because your capital will have appreciated 2-3x, but your dividends also increase 2-3x. So it's actually double exponential growth, right? Which there's a lot of folks who won't listen to me and they're not going to understand what's going on. But for those of you who actually kind of understand what I'm saying, let me explain in more detail what's going on, right? So we can see we don't really need to go over this. You guys know that I go over all this shit during my daily updates of Msty. We know their fund performance. We know their expense ratio. We also know that their expense ratio is completely covered by the interest accrued on their T-bills, right? So for those guys on X who are, shitting on the fund because the guys want a percentage, well, they're managing our money every day. I promise you guys are not doing it anywhere near that caliber, right? So you're paying them a percentage a year, which is not bad, right? On top of that percentage they're making for themselves through T-bills. So we're not really spending money on expense either. So again, think things through, guys, and make your own decisions. Please don't let anyone make a decision for you, especially in investments, because whether you go up or down, you're not going to understand why it went up or down, and you're going to sell, right? Whether you sell at a profit or you sell at a loss, you fucked up, right? The point was to not sell. If you didn't understand that, then, right, guys, holding this specific fund is not the most bright idea, right? The point of this fund is not really to sell it at $70 each. You missed the whole point there, right? Right? We're building an every 4-week paying machine. See, I'm sick right now, right, guys? And that bitch still paid me, right? If I have to be at work, right? But like, you guys have to understand that they're different products. So trying to compare Msty, MSTR, Bitcoin, right? Bitcoin is supposed to be seen as a savings instrument, right? You're supposed to put money in there, lock it up, cold storage, and never look back. That's supposed to be your savings, right? On top of that, well, you might want to have some investments, right? So on the Bitcoin benchmark, you can generate alpha, right? You can actually create more returns than Bitcoin itself by investing a portion of your funds in MSTR. Well, but as we've discussed, what's the point of all this, right? If you're going to eventually have a lot of money in investments and a lot of money in strategy and a lot of money in Bitcoin, but you're still struggling to pay your bills and you're still not living, the life that God intended us to live, right? So this is what that is for. And for those motherfuckers who are talking about NAV erosion and all that bullshit, bro, I promise they either don't need the money, they don't need the income, or they simply haven't taken the time to look through the fund, right? Now, I'm not saying I know everything, but I have a lot of money in this fund, relatively, right? And I've done the research for the past 25 weeks now, so if there's any questions that you guys have that you want to get answered, I'd love to at least give my 2 cents, because I think I have a different perspective of seeing things, right? And it's kind of valuable. The holdings, right? These guys update the holdings report themselves, and I still do it. Why? Because, like, look, this kind of explanation, it's not as neat and clean and understandable by the average investor in Msty. No one's spending 40 hours a week understanding the fund like I might be, right? So, if we want to take a look at the performance, right? I kind of have TradingView set up here. We can kind of see, right? And Bitcoin's chilling at 85, guys. Gold, bro. China's top blasting the fuck out of that shit as we speak, guys. Sold the fuck out of the American bonds for pennies on the dollar, basically. Yeah, good night to them. But anywho, guys, take a look at, right? We see, what do we see here? April dividend, $4, $2.50, $3, $2.30, $1.90, $1.80, 4, right? 4, right? 3, right? 2, right? Essentially, if you bought this fund below $30, you have broken even. Essentially, they've given you your money back. The fund is $20 on inception date, and they've paid out $38 in dividends. So, right, you've actually gotten back 2x your principal, and your principal is still worth the 20 racks or whatever money you had, because it's still $20.58, right? So for those motherfuckers talking about NAV erosion, right, it's because they're zooming in too much, right? If you think about 2030, 5 years from now, do you think you'll regret buying MSTY at 20, 30, 40 bucks? There really can't be a way you think that way, right, guys? So think about it. You're investing, you're growing your dividends, you're growing your income. This fund is doing all of those things. Then how can you focus on, oh, well, you know, at the all-time highs, their all-time high performance wasn't as high as Bitcoin or MST? Well, no fucking shit. And first off, right, this is actually a leveraged version of Bitcoin, right? So if you hold MSTY, you will actually generate alpha over Bitcoin itself. That's a guarantee from my end, right? Again, if you have a 40-minute time horizon, maybe not. I'm talking long-term, infinite time horizon, right? Msty is a leveraged product. It's a less leveraged version of MSTR, but it's more leveraged than Bitcoin. Why? Because Bitcoin, if you see it as a 1x lever and MSTR as a 2x lever, I'm seeing MSTY as a 0.7x lever. So when you multiply 0.7 times 2, you get 1.4. So if Bitcoin goes up 10%, Msty should go up 14%. And MSTR should go up 20%, right? Now, on this, likewise, and when Bitcoin goes down, MSTY should go down as well, but just not as much as MSTR, right? There's a whole bunch of variables here, and frankly, no one says you have to full port any three of them, right? In my opinion, and this is the way I have it held, right? I have my own ratio of 1 to 5 to 4, right? I got 1 parts Bitcoin to 5 parts MSTR to 4 parts Msty. Why? Because I'm 22. I don't have 50 racks a month in income, right? It'd be nice to kind of have some cash flow here. I can build up on my ideas, you know, work on some side businesses, do some shit. But for those of you who are 50, 60, right? You guys don't want to like worry about the volatility of MSTR or worry about the volatility of Bitcoin, right? That's not comforting. What's comforting is knowing how many shares you have, and comforting knowing, well, they're not going to pay you a 10-cent dividend, right? You'll get a buck or two at the very least, as we've seen, right? That's more dollars than you would have had elsewhere, right? And this, now, if you guys are interested in the return on capital or return of capital metric, we can go over this. You guys can see here that, let's see what their last payment was. Where's their return of capital, guys? Quarter end, let's see. Let's take a look at their summary prospectus. Right? We'll look for ROC, return. Right? I guess that's not, this document isn't searchable. Okay, let's take a look real quick, right? Where is this at? Return expected. Investments, MSTR. Okay, we see the annual here is that. Okay. I think we'll see the ROC part, guys, when we go over the actual prospectus towards the end of this video. But you get my point. Here, if you sold MSTY, sure, you would have doubled your money, paid taxes on a quarter of that or more, and then you would have not received the dividends to lower your average cost, right? Again, not the point of the fund. But yeah, so let's take a look at their actual full prospectus here for you guys. This was last updated February 28th, right? This is what we'll go over, and let's get started. As I've said, the management fee, it's fully covered. Fully. There's actually more left over. The amount of interest we accrue on our $1 billion of bills, it's enough to pay these guys out for their margaritas and happy hours and whatever. and whatever Joe's Steakhouse, they got the max deliveries coming in. Whatever, it doesn't matter. They could pay for all that bullshit, all of it, and they're still paying us out a penny per share per dividend, typically at the least, right? So, guys, don't look at something and run away. Look at something and run towards it, right? Portfolio turnover. I mean, I think using their models is kind of bullshit, so I won't be looking at that. I have my own, right? When you look at these funds, you can't just blindly enter. You have to have your own theses. And likewise, for Msty, I have Coney, Tesla, and Nvidia. Now, I know a few of you guys are asking me why I own those three, if they're not going to outperform Bitcoin or outperform MSTR or outperform Msty. It doesn't need to. Why does everyone always want maximum ass returns? What the hell happened to freaking balancing out shit? Right? I don't need to have 50, 70 racks in Msty, right? I can have, if I have 70 racks, I can have 50 in Msty and 20, 30 in Coney, Tesla, and Nvidia, right? Those three companies are going to be booming in their own ways. If you guys are interested, please comment down below. I'll take another 10 minutes out, make a video for you guys because, dude, I'd like to think I'm not wrong. In the short-term horizon, I'll be fried every time, guys. Don't listen to my short-term advice. But long-term, I might be onto something, boys. And women out there who are listening. So for the synthetic long exposure, we've already gone over this, right? The way the fund works is, let's say they have a $2.5 billion AUM, right? If they were to take all the money and buy all the shares in order to give us the exposure to the underlying, right? They wouldn't have money for the options. So that's not viable, right? And in turn, what they can do in a more capital efficient manner is keep a bunch of the money in bills, right? And store it as collateral for their short puts and for the long calls, right? These are the synthetic options that they have. Equal contracts, equal strikes. This is mainly to give us exposure to the underlying, right? And they run their own mathematical, derivation of like how much they need to have contracts wise based on the AUM and all that, right? There's a few smart folks over there, guys, right? We don't need to worry about all that bullshit. Now, how do they actually make the money? Well, if they're not really getting the synthetic bailouts from their positions, right, the covered call strategies might be winning. If they're selling short calls like we have for today at the 310, 330 price range or whatever that is, right? Went over that yesterday. Whatever that strike is, if they get blown past, if MSTR goes past that, well, then our covered calls, we kind of lose money on them, right? But we've already made the income, right, per se, because we got the credit open, right? So we got credit at the open, right? So given that our short calls don't get blasted away, we'll close that position for a win. And now that win will go towards return on capital. It'll actually go towards a taxable income. But as you guys have seen the past few payments, right, minus this most recent one, the return of capital has been really, really high, right? Meaning they're actually giving us our money back and helping us lower our average costs, right? That return of capital has zero tax. So the few payments we got before this last Friday, they were 95% return of capital. So if you got $1,000 dividend, you only pay taxes on $50 of that, right? So consider that. Now, going forward, what's going to happen is our covered calls are going to get cucked, right? They're going to get absolutely blasted. Well, why? Because we're going to be going up and we're going to lose that money, which is fine. But our synthetic positions, right, they will be able to be kind of expire or sold or rolled over for a profit, right? So, it's important to take a look. And I think tonight, guys, I'll make another video regarding the update on tonight's positioning. So come watch that. It'll be a better UI, better whole, experiment or experience of kind of watching and understanding how the fund works. We know how the fund distributes its shit, right? See, this is what differentiates MSTY from IMST, right? We've spoken about how IMST doesn't like to sell super tight calls, right? MSTY is selling the tightest calls they can, because they want to just get all the capital they can get. They want to capture as much premium as they can. They're arbitraging the volatility, right? You can't arbitrage the volatility if you're selling it 30% out of the money, right? So, yeah, other than that, we just got the, typical financial bullshit jargon. You guys should consider the risks, right? But this is Bitcoin-backed risk, right? So, Msty will perform way differently than other yield max funds. Other yield max funds will go down and to the right mostly. Misty will not do that, right? Worst case scenario, it generates alpha on top of Bitcoin. And that's not really a worst case scenario, is that, guys? That's the best case scenario in a fiat world. But yeah, other than this, there really isn't much for me to go over. If you guys want to see, like for example, potentially me model this out for you, and give you a true like idea of what's going on and what kind of premium to expect, I can definitely go ahead and do that. In fact, let me see if I could do Grok. Let me see if I could get Grok open for us. Okay, Grok model. All right, so let's just have Grok run a model for us real quick. And we can see that Grok will say that, the fund came out more than a year ago. And if we put $10,000, right, we see that the initial share price would have gotten us 500 shares. Since those 500 shares, you would have gotten quite the dividends, right? And no, obviously this is taking an estimate and it's not doing the math the way we wanted to do it. But roughly, with the shares, with the premium, with the dividends that we've gotten back, if you took those and you reinvested every single time, you would end up with more and more and more and more and more shares. So there doesn't, not much more math has to be done than that, right? I mean, if you know that it'll go up and they're going to generate volatility, when it's going down, that's a good thing, right? When the fund's going down, you're actually about to pick up more shares, right? Compared to $45, we've been getting discounts, right? Heavy discounts on the shares. You think it won't get back to $45? Right? So see it as a discount, right? For those of you who want to see me actually run my own numbers, not just through AI, please let me know. I'll go ahead and do that for you. But I hope this was helpful. Peace.